Hello everyone, Vedant Radhakrishnan here. I'm a chartered accountant and today we are going to be talking about the new tax regime versus the old tax regime proposed in the new Finance Bill 2023 as part of the Budget 2023. So, we're just going to be doing a small analysis between the old regime and the new regime. Specifically, the old regime and the new regime, we're not going to look at the other factors and the other proposals in the finance bill as of yet. That will be coming out in more videos, but for now, we're going to be talking about purely the new regime versus the old regime, how the tax rates affect different levels of income, etc. So let's get right into the thick of it. So, as you can see here, I've prepared a sort of a working and a calculation where you'll be able to, find out uh, which regime would be better for you with respect to your level of income or with respect to your salary income. This primarily will be applying for salaried individuals. You can apply it for others as well, but primarily since majority would be a majority who would be interested in this would be having salary income. So um, we're going to be focusing more on that. But as you can see here, if I zoom out a little bit, it's a whole consolidated working of the old regime versus the new regime, the difference in the slab rates, and there's a computation table where if you put just your salary income or just the a hypothetical figure that you want to put in, uh, all the calculation is done automatically, and we will tell you that which option is better for you, which regime is better for you, the old regime or the new regime that would be here. Please keep in mind that this is only for educational purposes. This is not financial or investment or tax related advice. It's purely for educational purposes. So let us get into the analysis. Now, you would be seeing a lot of videos or a lot of places where already the slab rates are discussed, but let's just go through it again. So, in the old regime, the slab rates are where your income is between 0 to 2,50,000. The rate is 0%, where it's between 2 lakh to 5 lakh. Excuse me, this is a typo. 5 lakh, it's 5%, where it's 5 lakh to 10 lakh. This again is a typo, my mistake. It's 20%, and above 10 lakh will be 30%. Now you do get a rebate under section 87A if your income is up to 5 lakhs. So basically, if your income is up to 5 lakhs, you won't be paying any tax. Above that, it is as per the slab rates. Now, coming to the new regime, if we talk about specifically, the section is section 115 BAC. So now there is an amendment in section 115 BAC where before the rates were slightly different, the slab rates were slightly different, but now the new proposed slab rates are as such 0 to 3 lakh. If it's a little difficult to see, I will be zooming in. So let us go back here. 0 to 3 lakhs will be 0%, 3 lakh to 6 lakh will be 5%, 6 lakhs to 9 lakh will be 10%, 9 lakh to 12 lakh will be 15%, 12 lakh to 15 lakh will be 20%, and above 15 lakh will be 30%. Now, these are the rates. Now, let's get into the calculation. Before the calculation, uh, the section 87A rebate applies in the new regime as well up to your income of 7 lakhs. So, in the old regime, it was 5 lakhs. In the new regime, it's 7 lakhs. So, now let us get into the computation. Now, I just put a hypothetical figure. We don't need to start out with um, 9.5 lakhs. Let's start out with, say, 3 lakhs income. Suppose a person's annual salary income is 3 lakhs, for example. Now, let's say that you don't have any chapter 6a deductions, that is, you haven't contributed, contributed to a life insurance policy, etc., etc. So you don't get any 80C deduction, you don't have an 80D deduction. So let's just keep that as zero for now. It is important to note that now under the new regime you do get a 50,000 rupee standard deduction, and in the old regime you always had a 50,000 rupee standard deduction for salaried income. So let us see now. If you And it's also important to note that in the new regime you don't get this chapter 6a deductions, whereas in the old regime you always do get the chapter 6a deductions. So now let us see, for a salary income of 3 lakh, let us see which is the better option. As you can see here, it says the new regime is the better option, but let us anyway go to the computation. For the old regime, you can see that your tax will be nil. For the new regime, your tax will be nil, of course, because 0 to 2,50,000 the tax rate is nil, and you do get a rebate if your income is up to 5 lakh, and in the new regime up to 7 lakh. So you basically will be paying nil, and the better option here is set as new, because as per the finance bill, the default return is going to be, and the default regime is going to be the new regime. So you need not do anything, you can just go ahead and file your return under the new regime. So that's if your income is 3 lakh. Now let us turn it up a bit. Let's see whether 5 lakhs. Now, if your income is 5 lakh and you don't have any deductions, absolutely fine. You'll still be paying zero tax, and you can still opt for the new rate or the old rate, whichever you want. The new regime or the old regime, whichever you want. Now, let us bring it up a bit. Let's go to 7 lakhs. 7 lakhs. Now, if your income is 7 lakhs and you are opting for the old regime, you will be paying a net tax of 44,200 rupees. And if you are going for the new regime, you will be paying net tax of 0 rupees because of the rebate under section 87A. So you will be saving 44,200 rupees if you go for the new regime. So here the new regime is beneficial if your income is 7 lakhs. Now, let us turn it up a bit, or let us try something here. Now, suppose if you have a life insurance policy and you've paid premium, and you have some contribution on the other schemes under section 80C as well, then let's say your maximum deduction allowed under section 80C is 1,50,000. Now let's go back to the computation. It's 0 and 0 because under the old regime your total income becomes 5 lakhs, and for 5 lakhs you have the rebate. So it's 0 and 0. Now, and if it's 0 and 0, you can go for either of the regimes. Now let's move on to 9 lakhs. 9 lakhs. 9 lakhs. Let's see. And it's always good once you start getting earning higher in the 9 lakhs area to invest um, in certain funds which will get you those deductions. So if you are having 80C deduction, which is 1,50,000, which is the minimum, which is the maximum deduction under section 80C, but I'm not counting taking into account the other deductions that you can get under 80D, 80G. So I'm just taking into account the standard 80C deduction. So now if you take the standard 80C deduction, the new option is still better because you will be saving 13,000 rupees under the new option. Now let us turn it up a little bit. Let us take it to 10 lakhs. Now if sorry, this is 1 lakh, add another 0. Now if it is 10 lakhs, then the new regime is still better. Now let us try doing one thing. Let us try adding 50,000 rupees. Let's say you take 80D insurance, a mediclaim insurance policy for your parents as well. So let us make the section chapter 6A deductions 2 lakhs instead of 1,50,000. The new regime is still better. So here we can see that the new regime is proving to be beneficial if your income is 10 lakhs and you still, and if you still don't avail your chapter 6A deductions under the new regime, because you can't, but you will still be saving 10,400 rupees. So now let us see if you have some more deductions. Say if you have some ATG deductions. So let us see how that works. So, or if you have some interest on house loans or something like that. Let's see if you have 2,50,000. If you have 2,50,000, then it's virtually the same. So you can either go for the new regime or the old regime if you have a deduction of 2,50,000. Suppose if you're willing to get deductions of say 3 lakh, then the old regime is better. As you can see here, the formula shifted to the old regime because you will be saving 10,400 rupees in the old regime. So it's all in the play of the deductions, right? So now let us try to increase the income a little bit. So let's go to 15 lakhs. Now, if your income is 15 lakhs, you get the deduction under the old scheme, you don't get the deduction under the new scheme, but it's still advisable that you go for the new scheme, right? Or you need a deduction of, you somehow need a deduction of 4 lakhs, or let's say if you get 3,50,000, will it suffice? Still no, you would need around 3,50,000 to 4 lakhs to be to save money under to save tax under the old scheme. So that's if your salary is 15 lakhs. So now let's get into a little bit higher earning capacity. Let us go for 30 lakhs. So if you go for 30 lakhs, you have about 4 lakh deductions. Oh, sorry. If you go for 30 lakhs, you have about 4 lakh worth of deductions. It's better that you go for the old scheme because you save 7,800 rupees in the old scheme or the old regime. Next, let us move on to where surcharge now applies. Now, let us say, suppose your income is 65 lakhs or 70 lakhs, let's say. This is 7, I'm sorry. If your income is 70 lakhs, it's advisable to go for the old scheme because if your income is 70 lakhs, then you will be paying around 20 lakhs or 30,000 as tax under the old scheme, but you'll be paying around 20 lakhs 42,000 as tax under the new scheme because surcharge is applicable at 10% under both the schemes here. So that's a big add-on to the tax. Surcharge was always there. In fact, the surcharge limit has reduced under the new regime. The 37% bracket for income for if your total income is above 5 crore has now been removed. Now the maximum surcharge is 25% only under the new regime. Now, if I take away the 4 lakh of um, deductions and make it 1,50,000, let's see which is better. The new scheme is better. So again, it's in the deductions. Now let us move to higher earning capacity 1.5 crore. So 150 0 0 0 0 0. Let's see how it works. The new scheme is better, but if I you save about 80,000 rupees under the new scheme, but if I increase my deductions to say 4 lakhs, then the old scheme is better. So what we can see here is that if you're not going to use your deductions, then it's better to opt for the new regime. But if you do have deductions, and if you do have sources where you can get Chapter 6A deductions, mainly your 80C, 80D, 80G, contribution to your provident fund, all that, if you have, then you can go for the old scheme. Looks like the old scheme is very beneficial, but if you're not looking, if you don't have high deductions or high exemptions, then the new scheme does prove to be much more beneficial. Now let's move on to very high earning, very high earning. Let's move on to 4 crore, 40000000. See, again, the old scheme proves to be better by 9,750 rupees, but still it does prove to be better. If I make it 1,50,000, the new scheme you save 87,750 rupees. So if you don't have much deductions, so you save a lot of tax by opting for the new scheme. Next, let me see whether yes, let me see whether, yeah, it was okay. Next is, you can keep going on and on. Let us try for let's say 7 crore. So 700 00000. Then you save a lot of money through the new regime. It's all because of the 37% surcharge, right? That's what makes it very high from a taxation point of view. It almost seems unbelievable, right? You save so much money through the new scheme. So that's basically how. Now I just want to reduce it, go back to the status quo, 9,50,000. Yeah, you save around 80,002 rupees, 200 rupees under the new scheme. So guys, this was basically just a small analysis. It's a quick video, small analysis of the new scheme versus old scheme that is proposed in the Finance Bill 2023. And please let me know if this was beneficial to you, if this gave you an idea of how uh, and when to use which scheme. If I made any errors in my computation or in the understanding or anything like that, please let me know. Uh, and if you want this Excel sheet as well, please let me know. I will be more than happy to share it. And uh, in the future, videos will be coming out of the more macro aspects of the budget, like, and the economic survey as well. Also, the other aspects of the finance bill will be coming out. Please let me know what you would like me to discuss, and let's have a good community here, a good place to discuss things. And I'll see you all in the next video. This has been Vedant Radhakrishnan. Thank you.